Welcome to another engrossing episode of Law and Finance. Today, we delve into the riveting narratives of bankrupt billionaires, exploring the ascent to financial zenith and the subsequent plummet into fiscal oblivion. Wealth, as illustrious as it may seem, holds an ephemeral nature. The tales of financial titans we unravel today epitomize the volatile essence of fortune. EIKE Batista, once a symbol of Brazil's economic rise, built his empire on the promise of untapped natural resources. His journey to a $30 billion fortune began with gold trading, and later diversified into mining, oil and gas ventures through his conglomerate, EBX Group. However, his fall was as meteoric as his rise. The failure to deliver on overly ambitious promises, coupled with plummeting commodity prices, sent his companies into a downward spiral. The final blow came with a conviction for insider trading and market manipulation, leading to his net worth plummeting into the negatives. Batista's tale is a riveting narrative of ambition, risk, and the volatile nature of fortune. Quinn, once the wealthiest man in Ireland with a net worth of $6 billion, was synonymous with entrepreneurial prowess. His fortune was amassed through a diverse portfolio spanning from cement to insurance. However, the 2008 financial crisis marked the beginning of his financial undoing. His catastrophic investment in Anglo-Irish Bank, driven by complex financial instruments, turned sour as the bank's shares collapsed. The losses were monumental, eventually leading to bankruptcy and a bitter legal battle with the bank. Quinn's story epitomizes the peril of over-leverage and the unforeseen risks lurking in complex financial instruments. Elizabeth Holmes, once the youngest self-made female billionaire, epitomized the allure of Silicon Valley innovation through her company, Theranos. Promising to revolutionize medical testing with just a drop of blood, Holmes amassed a fortune valued at $4.5 billion. However, the facade crumbled when it was revealed that the technology was fundamentally flawed, and the company had misled investors and regulators about its capabilities. Holmes was accused of massive fraud, and her net worth evaporated as Theranos dissolved amidst a slew of lawsuits. Her tale is a stark reminder of the dangerous dance between innovation, deception, and the relentless pursuit of success. Stanford, once listed among Forbes' richest Americans with a net worth of over $2 billion, was a financial maestro orchestrating a vast empire spanning banks, airlines, and media companies. However, beneath the veneer of legitimacy lurked a sinister Ponzi scheme. Stanford's wealth was amassed through a fraudulent $7 billion certificate of deposit scheme run through his offshore bank. The scheme came crashing down in 2009 when he was charged with fraud. Stanford's fall from grace was a descent into infamy, leaving a trail of financial ruin and a life sentence in prison. His narrative unveils the dark allure of financial chicanery veiled in a cloak of legitimacy. Vijay Mallya, known as the King of Good Times, had a fortune built on a liquor empire inherited from his father. Expanding the business, he ventured into aviation with Kingfisher Airlines. His flamboyant lifestyle and extravagant parties were emblematic of his affluent status. However, the downfall began with Kingfisher Airlines, which bled money due to operational mismanagement and a challenging aviation sector. The airline's demise led to unpaid loans amounting to over $1 billion, triggering a series of legal battles and Mallya's subsequent extradition attempt from the UK to face fraud charges in India. His saga underscores the peril of overexpansion and the importance of prudent financial management in sustaining wealth. Madoff's name is synonymous with one of the most notorious financial frauds in history. He built a reputed investment firm, attracting a clientele of celebrities, charities, and savvy investors. However, beneath the veneer of high returns lurked a Ponzi scheme of unprecedented scale, amassing $65 billion on paper. When the 2008 financial crisis rattled investors, the house of cards collapsed as Madoff couldn't meet withdrawal requests, leading to his confession and arrest. His life sentence and the financial devastation left in his wake serve as a grim reminder of the catastrophic impact of deceit in the financial realm. The allure of wealth and the dread of loss are powerful motivators driving financial decisions. Renowned psychologist Daniel Kahneman, a Nobel laureate, delves into the concept of loss aversion, stating that losses loom larger than gains, influencing risk-taking behaviors. Similarly, Jordan Belfort, whose life inspired The Wolf of Wall Street, exemplifies the extreme risk-taking fueled by the pursuit of wealth. On the flip side, the loss of wealth can trigger a severe identity crisis, as noted by psychologist Brad Klontz, often leading to stress, depression, or even suicidal thoughts. The stories we've explored today are not just tales of financial rise and fall, but profound human dramas played out on the world's financial stage, each carrying a unique psychological imprint shaped by a complex interplay of ambition, fear, and societal expectations. As we close this chapter, we invite you to subscribe to Law and Finance for more enthralling explorations into the complex world of finance. Share your thoughts, insights, or any other captivating tales of financial rise and fall you might know in the comments below. Stay tuned for more thought-provoking episodes that delve into the intricacies of law and finance. Until the next time, goodbye.